What's going on, everybody? Hope you guys are having a great day. You know, why might today be the single most important trading day of 2022? And it all has to do with swing highs and swing lows. If I can look back at today, I might have to find that today is the most important trading day of the year. Now, I'm not saying it's going to be because we don't know that before it is. It's easy to find in hindsight, but today has the potential to be so. And it's all because of what are called inflection points. So if you're not familiar with inflection points and you're wondering a bit more, hang on, we're going to cover that. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell. And if you are a regular returning visitor, just say hi, leave it in the comments down below. Okay, so why is today such an important day? Today is such an important day because it comes back to understanding what does an inflection point mean in the market. And an inflection point is really a key area where we could go one way or the other. And today is so important because of how we're sitting on a daily chart as well as a weekly chart. So let's look at the S&P 500 and determine what I mean by that. So we're looking at a weekly chart of the S&P 500. The ES is our weekly chart. And the thing that I want to pay very specific attention to is I'm going to really narrow it down and just call these swing lows and swing highs utilizing this yellow line, right? This yellow line tells me swing highs and swing lows. And on August the 15th, we put in our official higher swing high, right? So our official higher swing high was put in place right here on a weekly chart. Now, when does an uptrend begin? This does not mean that we started a new uptrend. This simply means that our downtrend was getting weaker. So when do we start an official uptrend? Well, we start an official uptrend when we have both a higher swing high and a higher swing low. And it will be impossible to have a higher swing low unless we get a higher weekly high. Well, as it stands right now, we are putting in a green candlestick for the weekly chart, which means that we're seeing a bit of bullish momentum. Now, what happens when I move this to a daily chart and why this is such an important day? Well, if I take a look at this on a daily time period, what we can see is that this morning we are up about 28 points. Those 28 points that we are up is coming off of a rally from September the 7th. Now, I'm going to throw volume on here very quickly because we do want to pay attention to the fact that yesterday we rallied up on higher than average volume. So rallying up on higher than average volume is a sign that there is a potential for continuation. Now we're coming into a Friday, and as we come into a Friday, as we've seen that has happened on Fridays in the past, Fridays can make you or break you. And last Friday, our candlestick was like this right here, where we had put in a Thursday reversal followed by, we got higher than Thursday's high on Friday, but it just didn't go anywhere, right? We were unable to really, follow through on last Friday's candlestick. Well, what about the Friday before that? Well, the Friday before that was this one right here, dun, 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 with our big red candle and our strong move down. So this is why I think that today could be the most important trading day of the year, because if we see another weak reversal on a Friday and price is unable to hold on to the gains that we've had overnight and we sell off and this turns into a big red candle, then I think that more than invites us to fall next week. But if we can continue to keep a big bullish move and a big bullish candlestick on our daily chart, then that would help to create our foundation for a higher swing low on the weekly chart. And that higher swing low on a weekly chart is a very important task. Now, once I've established a higher swing low, I would still like to see next week be the confirmation of that higher swing low by not getting lower than our weekly low. But once we've established a higher swing low and we've got 2 consecutive higher swing highs, now I can start to consider getting into some bullish positions early in a move going higher. And if I'm wrong, the beautiful thing about this is that if I'm wrong, I can place my protective stops right here, right? I want to place a protective stop right there and get in as long as we get higher than this week's high. And so now my risk is very, very small. But how high can this thing go up if indeed we do continue to put in higher highs and higher lows? Well, we're at an all-time high, right? So this could be a potential accumulation point for price to continue to rally higher. Now, if it fails and we drop a bit lower, I think then we drop to 3,500 in the S&P without really even thinking twice about it. I think there's definitely room for price to drop to around 3,500 in the S&P overall. Now, the other thing that I will point out, which is worth considering, is we've spoken about the head and shoulders pattern that was formed in the S&P. And this head and shoulders pattern, if you watched our video from last Friday, we talked about this head and shoulders pattern. If I activate this drawing after pulling it down, that takes us directly in a measured move to where we would anticipate a head and shoulders to reach. So the head and shoulders has completed its move down based upon the measured move, and we're saying at an area that could be an opportunity for a bounce. Now, I'm not saying that it is written in the heavens that we're going to bounce off of here and go into all-time highs. Please don't misconstrue. I'm still going to trade the chart that's in front of me. But if I've got some opportunities, then I'm going to look a bit longer. Now, for those of you that are day traders, if you're a day trader and you're looking for a small time frame opportunity, well, our 4-hour chart is giving me a higher swing high and a higher swing low. And in that point, you would look a bit smaller to say, well, where can I get back in and enjoy a little bit of this rally? And I think your best opportunity is going to be right here around 40.21, where you've got a little bit of a demand area that was created through here. And if you really want to tighten that up, you can tighten it up with just this 15-minute wick over wick area here at 40.17. So my point is that if you're a swing trader or a day trader, excuse me, not a swing trader. If you're a day trader, there's rooms to be bullish. If you're a swing trader, you're still technically bearish, but that rising momentum on the volume combined with bullish moves is going to make me a little bit more hesitant to get in, and we're at an inflection point for longer-term investing style of trading. So hopefully this makes sense to you. I hope you enjoyed today's video. If you have any comments, please leave them down below. We always love to hear from you. Until next week, everybody, I will talk to you soon. See ya.